Today we're going to walk you through the process of how to trend trade the stock market, specifically on the Nasdaq. So let's look at the Nasdaq and let's look at, we're in a bigger period of consolidation, obviously. But within this consolidation, let's look at where we can go next. I'm going to draw out a few lines of interest for me. This zone right in here. Let's kind of dig back to, snap back to reality and see where we're at. So we can see that this is the whole IPDE process. This was the broken cipher, by the way. There is room to go higher, right? Identify price action is just broken and closed above a previous level of structure, right? We had that. Technically, the break and close is right here. We predict that if price action violates the previous level of structure, then it's most likely to go higher. If we go higher, where are we likely to go higher to? Those are the lines I just drew out. And the next question, the last question, the third part of our prediction is if we're likely to go higher, then how are we likely to get there? So to run through that one more time, this is that IPDE process, right? Identify what has price action done. Price action has recently broken and closed beyond, above a previous level of structure resistance, right? Brain then goes to, okay, well, Keel, we know that if price action breaks and closes above a previous level of structure resistance, then the prediction is that price is likely to go higher. So now we're moving on to that prediction stage. So prediction is three parts. What is price likely? What direction is price likely to go in? Check, higher. If we go higher, then where is price action likely to go to? And these are literally questions that you can write out. Like if you're someone that's very visual and needs like a checklist, I had a checklist early on in my trading career that I printed out and put on the back of my wall, or put on my wall and back of my computer. You can literally write out these questions. We've had traders even make these cool little flow charts where, I don't know if you see the flow charts where it's like, you know, it's a kind of a thing and then it has an arrow and like, if yes, you go this way, if no, you go that way. Whatever makes you feel the best. But we know that the prediction is we're likely to go higher. And then where are we likely to go higher to? That's what I just did when I scrolled out to the daily and identify the next level of previous structure. And that gives me a predictive level of where I think price can go, that yellow zone here, if I take this first one away. And then the third part of the prediction is how is price likely to go there. That's the easy one because it can go straight up, it can retrace or consolidate. So what I've done is I've created a bias for myself as a trader. I know that at this current location, I am only interested in longs. If I were a counter trend trader looking for shorts, I won't be interested in shorts until we hit this yellow line. So I've given myself a bias, so now I can only focus on one direction in the market. I don't need to think about, well, how can I buy? How can I sell? How can I buy? How can I sell? I'm only thinking about buying. And now the question is, what do I need to buy? Well, we have price action doing this, right? We've come up, we've retraced, we've come up, higher high, higher close once again. So same type of thing on a micro time frame. We've retraced. Now, there was a chance for you to buy at this retracement. Certainly, right? Especially as we came into this little zone. Again, beautiful zone right here. I don't know if you guys can see this. My eyes are drawn to this. Drawn to this. But beautiful zone right here. Probably no reason for entry unless you went to maybe a lower time frame. So what I would require is a fresh break, because I know that this is a new structure high. Would you guys agree? Going back to our process, if we were to violate this level, would this confirm, or would this confirm the trend, the directional movement, or would it not confirm it? It would confirm it, yeah. So does anything change? No, it confirms my bias. And then we wait for the same thing. We wait for the next retracement and see if you get a chance to hop on. And then if we don't, we wait for the next break and then see if we have a chance to hop on. And then we do this all the way until we get to our ultimate destination. And then once we get to our ultimate destination, that's when we do a full reevaluation. So I am bullish until we get to this level. And my job is to look for buying opportunities until we get to this level. Once we get to that level, that's going to be another decision point. And then at the decision point, now we have to kind of sit back, wait for the market to kind of give us clarity again. And then we restart the process. And the process could be looking for more longs, or the process could shift to looking for shorts, all depending on what happens there. But that is the game of trading, specifically when it comes to indices, because indices tend to be more directional. The stock market in general tends to be more directional. If you're going to look to trade an index, typically you have, I was talking to someone on the chat about this yesterday, about the effects that the FOMC minutes are going to have, or the effects that the FOMC minutes are going to have on interest rates, and that if we're going to a cutting cycle, what effect that's going to have on the stock market, right? And if you think about the stock market historically trend, or indices historically trend upwards, the majority of your game is this. So when I look to, I don't trade any indices, but I invest in them. What I do in this, and this is different than my trading. In trading, I always say this, right? I am 99.9% technical, 0.1% fundamental. And the 1% fundamental I use for potential home run trades, where I selfishly look for opportunities to make more money than I usually would make, right? Can't blame me. As an investor, I'm completely the opposite. Fundamentals come first, and then technicals come second. Fundamentals create my bias, technicals create my opportunities. Does that make sense, guys? Fundamentals create my bias, technicals create my opportunities. If I want to buy Apple, I want to buy Apple because I think it has a good opportunity of growth from a fundamental perspective. Once I think that it has a good opportunity for growth, the technicals tell me, okay, where can I get in at a relatively good price, cheap enough price if I'm looking for something like that? Where may I want to take some profit out once it gets to maybe an extended price? So when you look at an indice that historically, again, we're looking at the S&P or the Nasdaq or something like that, when we historically trend upwards, your bias is probably always bullish. So you're always looking for these breaks and then chances to get on that trend. And then your counter trend brain is switching on, not necessarily for counter trend trades, but thinking like the other trader, your counter trend brain is switching on for areas of danger. Where am I taking profits at? Or where should I no longer be interested in buying opportunities because we're probably going to get a period of relief and I can get involved at a cheaper price point a week from now? Stuff like that. So it's that's why we say, technical analysis is key, in my opinion, whether you're going to be a trader, whether you're going to be an investor, whether you're in the Forex, stock market, whatever it may be, because it can help increase your edge. And I can tell you this, I wish I knew about technicals when I was in the stock market. Oh, I wish. So about a month ago, Jason and I hosted a massive online trading event called Cyber Trader. It was the first live event that we did in years, and honestly, it was one of the best that we've done. Because of that massive demand, we decided to re-upload the recordings from the Cyber Trader workshop. So if you check out the link in the description box below, you can go, you can sign up, you can watch the entire workshop, all 4 days. Just remember, these recordings will only be up until the end of the month, so make sure you get on it right away because it's a lot of trading, and we're not going to relaunch it again. Trust me.